Hey, this is Jeff, the HODL review here on the chain, again with Nick Black. There's a ton of things that are going on. We saw this, the battling over the. Oh, sorry, guys, I got my volume over here going on. We've got, the stimulus package going on. We've got government regulations that look like they're trying to control cryptocurrency. The SEC is chiming in on things. The CFTC, the Fed, central banks, government stuff is dropping. It's insane. I want to get this all started, and we're going to do it right about now.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.
All right, Nick, it's great to have you back on. There's a ton of stuff that we got to cover. Man, what in the world is going on today?
The world is on fire. Financially, the world is on fire. And I think we're starting to see, if you back out the event that we all know is going on with the virus, we're starting to see that there are massive fractures in the financial system, and we're starting to see things devolve, and markets kind of pull apart. And then we're seeing what the Fed's answer to this is, because all roads lead to the Fed. And I think we're just starting to see all sorts of craziness. And of course, when you have problems with the market in total, and you have, like what we call this kind of systemic organ failure, you're going to see legal issues arise. You're going to see battles in the legislature. You're going to see, congressmen and senators duking it out over stuff they don't really know what they're, always talking about, but they're pretty excited about it.
Yeah.
But and so you're going to see this. I think again, it all goes back to the Fed. I think if we trace it, and then it's flowered into this madness, and we're seeing it in every single aspect, every direction you look right now. And people are on edge. People are very uncomfortable with the environment, and many people are cloistered or they're stuck at home, and so you have this kind of sounding box where you're stuck, and people are spending a lot more time doing research and on the internet right now. I think oddly enough, people are really informed more than normal, like this last couple of weeks.
Yeah, I mean that's it's crazy. I mean I feel like there's some momentum brewing. There's something is happening. But if we look at it, we're gonna go in and dissect a little bit about the fact that they removed the digital dollar from this quote unquote stimulus plan. But yesterday, while all these other things were going on, it looks like there was some movement as well in terms of the CFTC. So yesterday, the CFTC issued some guidance and supposedly some clarity, but it was super, super confusing. I don't know if you had a chance to look at it, it's crazy. So they released this CFTC issues final interpretive guidance on actual delivery for digital assets. This is, DC, and they go to Section 2CD of the Commodity Exchange Act in the context colloquially known as virtual currencies. But then, maybe it's starting to clarify what they are. But it's crazy. It just some of it just it's so ambiguous.
The CFTC's objective, I believe, is to clarify for the sake of futures markets. So compare gold, right? So in the gold market, digital assets would fall under classifications. This is just so that they can maintain those markets, in my opinion.
Okay. All right. That's a good way of looking at it. So while the CFTC is doing that, we have the SEC is same day. So it's a little interesting. Here we have a little guidance, and then the SEC has the court siding with them, and the court actually grants an injunction
Yeah.
against issuing their digital asset. That's Telegram's digital asset, and they say that it met the conditions of the Howey test for being a security.
Yeah. I looked at that. I think they're right. I don't often side with the SEC. I think in this case they're right. I think that the way and this is one of the reasons I never got involved in that ICO, or that offering, or whatever they're legally going to call it, is that when it looked like they were guaranteeing the initial investors an immediate flip onto the markets. So the way I interpreted it, what from the literature that I got, just because they were looking for money, is and I may not have even had enough money to participate, because their whole investor list was like 170 people, 175 people. So it wasn't, it was big money that was coming in with the under the auspices of, you can take this, then you'll flip it to all the exchanges. And that just seemed a little bit, obviously that's a guarantee of profit, or a promise of asset appreciation. That kind of falls right in there with what they were saying. I think they just handled that wrong.
Yeah, yeah, I tend to agree, and we've seen that with other entities as well that came out of the gate like that. The Kin token by the Kick platform up in Canada, they came out but they flaunted it. All right, so then they said, well, this meets the conditions of a security. They bring them to court, and then instead of saying, hey, let's find a way to figure this out, which is really, I think, at the end of the day, the SEC wants to have some sort of a discussion. They want to figure it out. They're not just trying to destroy everybody. But in this scenario, like with Kick, they said, we're coming after you. We're not going to sit back and take it. And we're going to raise legal funds so other people can fight you as well. I mean, they could have, sat down and discussed, get your case settled first.
Yeah.
Then if you lose, then say, I'm going to raise money for everyone else to try to fight it and bring them back to court. But while you're going to court and you're going to flaunt and be aggressive like that, definitely backfired on them.
Well, Kick is funny. It's a funny example. The Kin token. I'm not sure where that one falls, to be honest. You can kind of argue that both ways. The fact that Kick, a platform that until now was just used to send dick pics, I mean, it was a very low, kind of very low functionality kind of messaging app. It wasn't near the quality of a WhatsApp or a Line or whatever. So I guess when I look at that, I say, here's a group of individuals that really did just look to I think they just looked to kind of cash out, and they thought, hey, people are sending pictures, so they'll send money, and creates kind of a weird system. And are these tokens, are these bonuses for playing video games? Like, they weren't really clear on what they were. And again, like to your point, they thumbed their nose at the SEC. And look what EOS did. EOS raised almost maybe more than $4 billion, if you count at the height of Ethereum. And they paid a $9 million fine. They said, hey, there was some issues with the way you raised that money. It was a 7-month long or an 8-month long, ICO.
Yep.
You owe some cash. They cut a $9 million check. EOS has never been better. Well,
right.
If you don't go and dig into the details of their governance and all. I'm just saying, as far as their legal standing, they're fine. And it may turn out that Ripple pays some kind of very minimal fine based on a few people having touched, XRP in a security-esque way or something like that. And in my opinion, pay the, 8 million, 9 million, 10 million bucks and be on your way. But what Kin has done, or Kick, is these guys have taken this weird ideological stance and expect the community to rally behind them. But at the end of the day, they've put themselves in such an untenable position. It's very hard to kind of get in their corner. I think one of the directors said, we'll fight till our last dollar until we go bankrupt.
That's right.
Well, that's stupid.
That's right. Yeah.
How about you just sell some ads on your messenger and be happy that you got anybody on that thing?
That's right. Exactly. I mean, that's yeah. You take the right approach. And I just wanted to say what's up to everybody that's joining the chat tonight. Hopefully, we'll have more people coming in as we roll. But I wanted to address some of the questions. And if you guys have questions, comments about what's been happening today, definitely throw them in there. Chuck S., do you guys think they're printing trillions because they know it will soon be wiped out when the U.S. gets 10 or 15 billion XRP and price is reset at 4 digits? Boom, debt is paid off. What do you think about that?
I would say no. I don't think that Jay Powell knows what XRP is. He obviously knows about Ripple, the company, because they've made their influence very clear and precise, and everybody knows everybody and on the Hill. But I would say that they're not factoring things like this in. What they are doing is they are trying every means possible to keep this thing going as long as it can. Because really, what are the options? Forget about all the minutiae detail. We just have this systemic financial organ failure. We have credit problem. We have problems with liquidity. We have problems in the way that markets are moving. Sometimes they're slow, sometimes they're fast. We have a bad collateral issue where there's a lot of junk or just garbage, straight up garbage collateral in the system, causing prime banks not to really do the bidding of the Fed, and the Fed is once removed. So I think you have all of these issues going on. The triple B market is about to collapse, and corporate debt's about to collapse, and then you're going to have a credit crunch. You're going to have, not to mention, we have a worldwide pandemic that's everybody's not working, and so you've got to pay rent and you've got to help people out. We have a lot of things going on, and I think the Fed is sitting in a room with about 8 people that were educated in the 40s, 50s, and 60s, and they're saying, what on earth are we going to do? You either print into infinity and the system blows up, or you don't print and everything blows up. So, it's you don't have a choice. And I think that they're thinking that, look, this is the path we've chosen for 12 years now. We're going to throw as much money as we can at this. We will become the buyer of last resort, the lender of last resort, the owner of last resort, the underlying owner of all assets, private, public, or otherwise. And we may even own the liquidity of the United States in the sense, if people have Fed accounts and everybody essentially does their banking through the Fed, and obviates the necessity for all these other banks. But what other choice do they have? I mean, I think we're at that point where this is it.
Yeah,
And
for good or bad.
maybe they get 4 or 5 years out of this. But you know what? That's 4 or 5 years better than collapsing the whole triple B market, collapsing the whole pension fund market, collapsing treasuries, collapsing equities. I mean, it's calamity, or it's maybe calamity in 5 years.
Yeah. Yep. Yep. So hey, who do we have that just joined in? X-Ray Romeo Papa. Good day from Oz. Good day to you guys over there and all the way in Australia. So here's and just what's up to everybody else. I know I said that, but don't want to leave anybody out. But here's one. This came after our last roundtable. So this was a comment on the roundtable video. And by the way, as you guys are watching, if you have questions, they're pertinent for now, throw them in here. But throw some comments down below as well, because that kind of keeps the flow of the video going when we go offline. But this one is interesting. And then I'm going to get into some comments that came out today on Twitter as well. But Joel Olazo, he said Executive Order 6102 is a United States presidential executive order signed on April 5th, 1933 by President Franklin D. Roosevelt. Now, this goes back to we were talking about gold and all of that. And so that executive order forbidding the hoarding of gold coin, gold bullion, and gold certificates within the continental United States. So here's the question. Can the federal government do the same with owning XRP?
Well, I guess there's 2 ways you could look at that. I would say, A, they can do whatever they want in an emergency, just whatever they want. And so you may be able to battle that out in court, and 10 or 15 years down the road, get your funds repatriated. But I would say they can do whatever they want. What they won't do is hold a type or class of asset hostage, because that doesn't really help anything, and that wouldn't solve their issue. If the Fed wanted to create a Fed coin that had the utility of XRP, they'd simply fork XRP. It doesn't take a genius. You could have an XRP2 that only functions inside the banking system. So essentially an interbank lending token that runs on the ILP that's based on XRP. So an XRP2 or an XRPF or whatever. So if they had this kind of asset, and if they forked it, they could basically ban public markets from being able to trade that specific asset. So they could fork it and use it internally and not worry about a public market trading around it, because it would have no utility outside of the interbank system.
Right. So then what happens to the XRP at that point?
Well, truly, if there's a fork, we would all be the recipients of this weird asset, of this weird interbank asset. And if I wanted a peaceful transition, and I didn't want a bunch of lawsuits, then perhaps I would do this fork. I would peg the coin and have a buyback period, like when they have new currency come out and they say, here are the new $100 bills, trade in your old $100 bills.
Yep.
Or when they repeg a currency, or when they do like a Plaza Accord type thing and they set a rate for a currency. I think you could do something like that and say, listen, for the next 90 days, you will deposit these in your Fed account. They will be swapped, 10 to 1 for US dollars. Cool, right? So they would make everyone whole, essentially having guaranteed an amount of money that's immaterial to them as the, insatiable lender of last resort, the indiscriminate lender. They wouldn't hurt anybody's feelings. People would have some kind of profit they would have created for holding XRP. Sure, that's not going to be a moonshot, but they could still trade XRP on public markets. But this specific asset would then be completely wholly owned by the Fed, and then they could do
Whatever they want to do at that point.
Yeah.
Yeah. Hey, what's up, the Gray Pate? He said he just made it, so that's awesome. It's always good we get the Gray Pate in here.
Welcome aboard.
So here we go. So here's a couple comments that I saw, and I thought it was interesting. So one of them is from Rob Cash. He's responding to banks holding digital wallets for the unbanked. But like I said, let's comment on that one first. I think it's interesting. So Rob Cash's comment here is, banks will hold digital wallets for the unbanked citizens to receive stimulus. Now, we kind of touched on this a little yesterday. How long has this infrastructure been ready for? They obviously, if they were talking about and they were proposing it in the bill, and it was removed from the bill once it went to the House, but if they were proposing it as part of the bill, that means that the infrastructure was already ready to start rolling this out, these digital wallets. So if that's the case, how long have they been working on it? And this goes back to what we were talking about a little bit yesterday as well, with a faster payment network that the Fed was supposed to put together, which would kind of fit along with that concept. But the last time we heard of it, they were like 5 years out. It wasn't going to happen anytime soon. But now what we're seeing is there's this possibility that maybe not the Fed, but somewhere between the Fed and the government and the maybe central bank, somewhere in this middle space, something was going on.
So as far as the software design of a wallet, there's nothing specifically difficult about that. We've got 11 years worth of different companies that have put up wallets, and you can go all the way back to the Bitcoin wallets that you can get at bitcoin.org, and you can fast forward to any number of wallets, my Ethereum wallet. So the idea and the technology behind wallets and the programming and the software and the code all exists, much of it open source. So the building of the wallet with competent software guys is probably 6 weeks worth of work. I have a feeling that the federal government has been involved in one way or another in looking at this, at least studying it, because there's a lot of speculation that much of this software came from the NSA, because a lot of these distributed networks were. The idea was they'd be great for spies to use to communicate in a kind of a censorship-resistant way, to pass coded information, things like that. Who knows? That's all speculation, right? But I don't think the technology is groundbreaking. I would assume that from the first second the Fed, not the Fed, but the federal government in any capacity or any agency commented on digital assets, they were in the space. So assume 2014, they were already making comments.
Yep.
Whether it's positive or negative, let's assume they were there since 2014. So the idea of having custody occur at the bank level and at the post office was mentioned, I think is very realistic, and they've probably been looking at this for 5-6 years.
Yeah, once they see it, and there's multiple reasons why they're holding off regulatory clarity in the space. There's a lot of things that probably have to happen instrumentally. It's a little nerve-wracking, I guess, when you see the government pushing something through that they haven't been able to do in a normal period, but they try to do it under hysteria, almost as though they're taking advantage of a scenario. And that's where, it looks like they're doing it for all the wrong reasons. and not the right reasons. And so I think that's where they lose a little bit of credibility on their perception or their perspective of it. But obviously they took it out. It didn't stay in there. But we don't know, like we were talking about yesterday, if it's not happening today, now it's on the table.
Right.
Just as we saw, they've been pushing Token Taxonomy Act, and they keep hammering away at one after another, trying to get some details in there. And now, we'll see what happens. I mean, it's anything's
Yeah.
possible. Like you were saying yesterday, it could happen. I don't know, 3 months from now, all of a sudden they can say, hey, this first round of checks didn't really go so well, but it looks like they're only going to give one round of check. So let's go there
Well,
because the next comment kind of factors into this.
I think this is one of a marginally infinite number of per capita stimulus that's going to occur.
Yep.
This is going to be the new norm, in my opinion, not the exception. We know that part of this package, well, we believe that part of this package, which, Bernie Sanders was going to war earlier today against 4 GOP senators, because anyway, a lot of this
Yep.
revolves around the issue that they want to put some protections in place for people on unemployment to have an additional 4 months of unemployment. Additionally, they would get $600 extra per week as part of that stimulus. Well, who's to say that this corona thing doesn't continue on? And I don't mean to belittle it by saying that, but who's to say that this virus issue doesn't go on for 9 months or 12 months or 16 months until we have a vaccine? To me, that's when this is over. It's not when people stop coughing, it's when we have a vaccine. Because until then, we're still all at risk. So let's say it's 12 months at the best, right? 12 months. Let's say it's 10 months. Well, 4 months of stimulus is not going to get us there in one check, right? So I think you're going to states upgrades. I think they're going to try to monitor the economy. They're going to try to balance what the Fed does as far as going in and purchasing equities and purchasing debt and purchasing debt instruments and purchasing everything that's not nailed down. But that's not going to solve a lot of the kind of small business problems, personal credit problems, rent problems, the type of issues that the average American's going to have. So I think that you're going to see constant nip and tuck stimulus packages for at least for the remainder of the year until we have some kind of vaccine.
Yeah, I mean that's definitely a valid point. To see how long this goes on for also depends on whether or not we ended up with some form of a pharmaceutical to treat it in the meantime. I mean we went a long time without a flu vaccine and we just treated the flu with penicillin and whatnot. But now we just have to figure that part out. So if the next step is this, we were talking about it yesterday as well, but if it's the chloroquine and plus whatever, if that at least is treating and
Right.
maintaining
Yeah.
and managing it,
I
life
actually,
life has to get back to normal.
I was listening to Peak Prosperity, and it was very interesting. They were talking about in the tests they've done, and they've been very minimal, the small groups of 30 and 40 people, but there's been no discernible alleviation of symptomology based with the drug or without. So it's no different. It's a malaria drug, and they haven't seen any kind of real relationship nothing significant.
Yeah, so we'll see what happens, as they start tweaking it. So here was another comment. I want to say what's up to Rain, by the way, that just came in here. I think Rain will be streaming Friday night, if I'm not mistaken. But he also had a comment there that he thinks that the digital dollar is still in the bill. But here was another comment that I saw that was up on Twitter, and it was kind of interesting. I thought it was interesting anyways. This is Erin Nakamoto, and she said, why do we have to pay taxes if they can just print money? I thought that was interesting from a number of different reasons because taxation, obviously, there's certain things within society that government has to pay for and people have to contribute in order to have these things within society. Um, Military, road upkeep, highways, security on the street, the police force, fire departments, things like that. Everyone has to contribute to those. Um, some in this socialist mentality want to say that those are socialist entities or parts of society because we're being whatever, taxed for it, that's not true. It's that everybody is really taking a part of their income that they make to participate in this. But it's interesting to have that statement. Why do we pay taxes if they can just print money? Because when they need more money or things happen or they want to do stuff, what do? They just print more money. And it's just, whereas the taxation ends up being a mechanism really to control the people more so than, as it gets out of hand, it gets a little bit out of control with what we see in Washington, because then you become the subject of government versus, the government being the embodiment of the people.
I agree. I think to be fair and balanced with that question, you have to look at what keeps an economy afloat, and that is debt, assets, and confidence, right? And so the way tax works, the way taxing is supposed to work in an economy that we understand, is that you spend first and tax second. And so it's always a lagging issue. Because you don't have the money at first, right? So you print it into existence through whatever mechanism that is. You spend it, you create the jobs, the growth, the infrastructure that the people need, and then you tax them some fair amount that scales with your prosperity, and that creates a scenario where ideally you can bring deficits really close to the tax rolls. That tax money is supposed to be destroyed, and the next year rolls over and you start over again. That's in a perfect economy. Now, that's never worked, by the way. It's never, ever worked for more than about 40, 50 years, and then it starts to spin out of control.
Right.
Because no one gets elected on the raise taxes, full austerity, pay more than you owe, platform. Those guys don't get far. So the reality is when this system begins, it slowly wobbles out of control. I think some kind of answer, in many European countries, they use like a value added tax. So essentially you pay tax based on what you buy. I'm all for that. And if my neighbor who's rich wants to go buy 17 McLarens and he wants to pay the luxury tax on that, which for, Mr. McLaren neighbor guy, that could be, really, really expensive. That's fine. I just want to buy food. I shouldn't be beat up for that. And I think that's a way you could scale luxury goods, luxury services, that kind of thing. And that's a way, let's say I'm a really rich guy and I'm very successful and I just choose to live in my van, I shouldn't have to pay 90% of my income.
Correct. I agree with that.
I shouldn't be punished for success, right?
That's right.
It no longer becomes a punishment if it's a value-added taxing scheme.
That's the best.
To me, that feels better.
No, I agree. I like that concept of, it could be a flat tax or I forget a couple of the terminologies they had out there, a fair tax. So they had the flat tax and the fair tax, but really it's a VAT. As long as you don't have the income tax bracket along with the VAT, like they do in Canada and other places where you're paying your income taxes, you're paying your sales tax, and you're paying the VAT. All in. But you're right. If you have the VAT, it's your prerogative what you want to buy, what you don't want to buy. If I decide not to be a consumer in society, and I'm just living, in a meager existence, and I decide I want to save all my money, what business is of anybody else's? This is the amount of society that I'm using. And then the idea is that everybody is supporting that concept, but they also realize that at some point, I got to believe in that environment that you are going to consume. You typically people in society, they're not going to go and live in a van down by the river. They're not going to live in that kind of environment. They want to live in a house. They want to be in an apartment. They're going to, kind of move through life in a certain standard of living. That's the average people. So with the VAT, they are going to collect, and I think they've run the numbers. I think it is the best way.
I think there's one thing you also need to take into consideration, and that is when you look at the way that governments spend versus the way a central bank creates liquidity. These are two different animals. And so, for instance, when a government wants, money, They essentially deficit spend, right? So they create some kind of debt instrument like a treasury. They print those things up, they pump them out. In our case, they pump them out, and most of those get purchased by prime brokers, which are the banks that deal directly with the Fed. These are like the top tier banks.
Yep.
So they buy those treasuries, they park them on the Fed's balance sheet. For doing that, the Fed gives them liquidity, but it's also at the Fed. So they have money parked on their accounts at the Fed. And so, at least until recently, the Fed could argue, well, the money we create never actually enters the economy. So, and that was the idea that, and that's where MMT gets bullied out into something ridiculous, because MMT is kind of ridiculous. But the idea behind the Fed is the Fed doesn't just print money and throw it out on the street until about 3 days ago. All bets are off now, but they didn't used to. What they used to do was they created accounts at the Fed. They took those assets and they would just credit your account at the Fed. So essentially, the assets are there, the collateral's there, and the money's there. It's never left the Fed.
Right.
Again, things have changed now, but so the government creates money out of thin air in a different way. They really just print money out of thin air. The Fed creates liquidity and essentially assigns that option to the banks. And they say, please go out and do these things that would help us out, but they can't enforce that. So the Fed is an expectation generator. They have expectations, and to play ball with the Fed, they say, we would love it if you guys would go out into the market and do our bidding. But they can't really force these banks to do it. And so that's, now you have the Fed going directly into the market. And what that last commenter was saying is absolutely correct. Now we do have an issue where they are creating money out of thin air, which for us is great, but for the average person, it's probably going to be really tough.
Yeah, exactly. Yeah, that's a good point. So all right, so here's some other ideas here. Okay, that was that. We talked about that one. Here's one that I thought was a little bit interesting. Article that came up yesterday as well. This was on the Daily HODL. And it says U.S. Department of Homeland Security names blockchain managers part of the critical infrastructure industry during this pandemic. So I think that, again, if we look at that in kind of a vacuum, but when you see that happening, so let's see, you have the CISA. What is CISA? Is the Cyber Security and Infrastructure Security Agency. This was on the 19th. It says industries that the government sees as crucial in providing essential services and products during the health crisis. The CISA also names blockchain managers in the food and agriculture industry as among those with critical roles in protecting public welfare and safety during the pandemic. It's nice that at least they're acknowledging the blockchain component of the technology.
Yeah, so that's not going to have, in my opinion, anything to do with currency. That's going to be supply chain provenance, and that's going to be immutable databases and immutable data structures. So especially in a situation like this, where you need to share information in real time and you need to know that it's accurate, I think this is a perfect data structure. Blockchain-based data structures are wonderful for that.
Right.
Probably something a little faster than Bitcoin, but if you could have, a coronavirus token, essentially a place where you put data elements from every country in real time with little packets of information that explain, pathology, case results, mortality rates, treatment procedures, and this's and that's, and all the cool medical things they do in real time.
Yeah.
Me as a man of science, that's something that's incredibly valuable.
Right. Yeah. No, that's good. So, all right. So let's look at this one. Hang on a second. Here we go. So when did this was on Yahoo. This was yesterday too. I don't know. All this stuff was coming out yesterday. I thought it was interesting. So on this one, Yahoo Finance, I always like looking at the mainstream reporting, because when the mainstream reporting starts touching on the digital asset space, at least putting it up, on their medium. So Yahoo Finance, they actually pulled this off of CoinDesk, but so they pulled the article. The title of the article: "The pandemic gives digital currencies another chance to shine." forget about what some of these guys say in the article. Sometimes interesting, sometimes not. Sometimes I just like the titles they come up with because it allows you to think, hey,
Yeah.
that's a great idea. I like that topic. Now
Yeah.
let's talk about it. But what are your thoughts? Do you think that this pandemic, short term, good or bad, and then kind of medium term, I don't know, throughout the rest of the year, let's say. So over the next quarter, going to make a big difference in Q2 to digital asset space, and will, if this extended, short, whatever, if we get out of this short term, what's the impact it's going to have on crypto the rest of the year, do you think?
Okay, so to me, there are two groups of people that entered the crypto space. I guess you could say there's three. Two classes of investor and one class of panic and impoverished. What I mean by that is, let's start at the bottom, the panic and impoverished. Look at all of these countries go into massive hyperinflation, the Venezuelas, the Turkeys, the Syrias, the Irans, all of these countries, when they go into hyperinflation, you start having a panic into Bitcoin mining, because their currency is disintegrating so quickly, their buying power is disappearing. The only thing they have with any kind of consistency is Bitcoin. And there's probably other assets they could use, but they all choose Bitcoin. So it's not like only smart kids or only nerds find Bitcoin. Apparently, when you're in a full-on shit your pants panic, you find Bitcoin. You find Bitcoin miners, the cops are doing it, everybody's doing it, right? So then you have the two classes of investor. And I would say one are the early adopters that are monetarily, ineffectual. And that is the guys that have $100 here, 1,800 bucks there, 10,000. Guys like me that have, maybe a little bit of cash parked from gold or from other assets or whatever. And they, we're going to take a flyer on this and we're going to ski. I'm going to put, 8 grand into it. And, oh God, I'm going to panic, but maybe something happens. And then 5 years later, you realize, oh my gosh, look what happened. And then there is the kind of upper tier, or the kind of the high net asset value, institutional investors that look at charts all day long. And when they see the Bitcoin chart and then they see the stock to flow ratio, they go, well, you have to own this. And they start barreling in with large torrents of cash that the smaller investor like us, we can't really compete with. They're the whale, and we're like the little fish, but we can follow them. So those three classes of investors all are going to behave differently. And as we go through the kind of segments of this issue, of this viral issue. So let's say the next 3 months for me and you probably doesn't make a difference, right? There's probably not a lot of retail crypto enthusiasm right now. People trying to eat, right? People trying to find out if they're going to have a job. People, there's a lot of panic right now, especially the lower and middle class. The institutional investor, now they're going, this thing is going to blow up in hyperinflation because that's the only tool the Fed has left. And so if that's the case, and if they pour liquidity into the real markets and that liquidity escapes the Fed's balance sheet and finally gets out into the real economy and bloats it, you have a lot more money chasing the same, you have more money chasing the same amount or less of consumer goods, right? And so that creates inflation. So I do think you see a lot of institutional investors coming in. Now, whether they do that behind, closed doors in the form of the futures markets, that's a little bit different. Your average investor, myself, I'm not in the futures markets. I'm not moving that kind of money. And then the guy in Venezuela that's mining to keep his family fed, he doesn't give two craps about the futures market or what the CFTC says. He's just trying to get some eggs before the guy at the farm charges 3 kilos of money instead of 2 kilos of money for eggs, right? And so it's just a battle to stay alive. So then let's go out another quarter. Okay, now things may have settled. We'll at least have an understanding of how the markets are going to be, how stimulus might be, things like that. So now the lower tier, the people that are just trying to eat, they're still trying to eat, right? Nothing's changed for them. They can't even look up. They're just trying to stay afloat. But now we join the party. We meaning the sub-optimal retail investor, the flighty, panicky, FOMO, right? The full retard. We jump in, and while we only represent a tiny amount of the investment, we represent about 95% of the media and of the hype. So what we do is we kind of coalesce and push this out among, through social media and Twitter and Facebook and and then it becomes a thing. And so the institutional investors are still buying, and they're still buying, and they're still playing a little bit, right? There's going to be big sell-offs where they short the market and pull all shenanigans. But as the market starts to bloat, it gets more mature. And I think that's what we're going to see is as we get more desensitized to the virus and its effects and the world around us, no matter how bad it gets, we will get that 50-yard stare and we will get desensitized to this. But I think we're progressing, and it's a pretty solid march towards a much, much bigger digital asset space in the trillions, not in the hundreds of billions where we're at now, 200 billion or something. I think
Yes.
we might see 2 trillion by the end of the year. So I think at the very bottom, they're just trying to eat. And at the very top, they're trying to game the system. And when we join the party, the whole thing will explode, I believe.
Yeah, and so from that perspective, I mean, it's going to take a little bit to get people involved at that point,
Yeah.
So what is it going to take? So now there's a lot of pressure on the economy. There's a lot of pressure on people's, jobs are at stake. We're seeing, there's some changes that are occurring in this marketplace right now. And whether,
Yeah.
it's it's gonna be interesting to see because as we're starting to see some of these meltdowns within the economy, and I feel relatively optimistic, that we're gonna see some progress, that we're gonna see things change at least in a positive light. I always believe in the American ingenuity to overcome obstacles. Now it's just a matter of whether or not the government is on the side of the people, or we're going to see full blown oppression coming on the other end of it, because we're at another pivotal moment in history where there's tension economically speaking. We overcame that during after 9/11. We saw an all-out attack against this country, and then we fought. Now for the past 20 years we've been fighting these wars, but this is another kind of war that's been waged against the U.S., against the world. But here we are in the U.S., so we have to figure out how we're going to get over it here. But it's interesting because here I say, okay, we're invested in the crypto space. We're seeing economics change. Is there going to be a point right now where people begin to lose confidence in the traditional mode of investment? And they start identifying that, hey, you know what? Bitcoin looks like a good place to invest, where I need to store my money. Maybe I need to find a way to grow my money. The traditional stock market, as companies start to implode, if that happens, it depends how it's crazy. It's funny too. I think about this, that we're about a week into this thing, 2 weeks into this thing, or getting about 2 weeks in it, and it's like pandemonium. The first week, it's just chaos. It's like, come on, everybody take a break, go on vacation, go to your house, relax, reset mentally, and now let's come back and start thinking about it rationally. And so but it didn't seem that way. It seems like everyone's in panic mode. I got to go buy toilet paper. I got to sell my stocks. Oh my God, the stock market. Oh my God, someone said something on TV and I got to go sell more stocks. What am I going to do? And then there's a run on fiat currencies in the bank, and, just chaos. And then nothing even hit our shores yet. It's wasn't even serious yet.
Well, I think as far as people selling the stock market, I think it should have been sold a long time ago. It's grossly overvalued. And again, I always bring this up. The last 10 years, 94% of the stock market gains were because of corporate buybacks, meaning everything else was only 6%. And when you back out corporate buybacks, you realize this market should be priced exactly what it was priced, adjusted for inflation 10 years ago. And $1 over that is wrong. And so you say, what's a fair value? I mean, everything has a price and a value, right? The price is what you pay for it. The value is where the true worth is, right? If you have a bag of Doritos, the price is 89 cents. The value is 89 cents. if you have the last bag of Doritos on the planet, the price might be, $200 million, but the value infinite.
Right. Yeah. Yeah,
so
that's true.
so price and value are two different animals. I think the value in the stock market is way, way less than the price. And unfortunately, the way Americans are fleeced is they're fleeced through the media, right? With these markets that close for many, many hours of the day. And so you wake up and you hear the news and you panic and you call your broker, who's not doing much of anything anyway, because he doesn't know what he's doing. He's just looking at a screen with numbers buzzing by, and he has very limited understanding of macroeconomics, but don't blame him, because either does Jerome Powell. And so, when you have, we've been cheating for 10 years, 12 years. We've been cheating on free Fed money. And I go back and I say, that's where it started. That's where this thing all blew up. And some people go back and they blame, where we had Bretton Woods, and when Nixon took us off the gold standard, that was the end of times and all that. But that's not really true either, because you can't restrict a nation to a currency that can't evolve with the size of the nation and with the growth of the nation. So, for instance, currencies have to expand and contract. They never contract because we're human, but they should expand with the expansion of population, with the expansion of growth. I mean, that's natural. And if you fix the supply of currency to an asset, so I never think we'll go back to a gold standard, because it just doesn't make any sense. It would be great for guys that own gold, and I understand. I own gold, but it's just not realistic. We're never going back to that. This is the course we've chosen, and so it didn't work then because it didn't allow for growth. And a lot of really smart people knew this, and a lot of really scrupulous people probably warned, and a lot of unscrupulous people said, "Oh, we can make a mint off of this."
Oh,
and
yeah.
so you're always going to have corrupt edges to every smooth surface.
Yeah,
But it is what it is. This is the path we're on. We have to have a currency that to some degree, it inflates. This is why I don't think Bitcoin will be the world currency ever, but I think it'll be an alternative currency forever, if that makes sense.
no, it does. And I think we're going to see baskets of currencies, where,
Yes.
and that's where the offset for the Fed, the central banks, and what have you, is this alternative investment space. So, like you said, where does the real value go? Is that real value of the alternative investment space in alternative monetary space, meaning the altcoins, the Bitcoin? Where does this end up going, with or without government regulation? I think is also, an interesting direction, because at some point, people get fed up with what's happening in the stock markets. They get fed up with the corporate manipulation. At some point, people get fed up with the way governments are wasting time, energy, and money on frivolous projects, or not backing up the needs of the people. At some point, that all changes depending on the country that you're in, obviously. US, maybe we have a little more flexibility than other places. But that could be a whole nother, blown out conversation that we could get into. We're almost, really coming up on the hour here. So like to keep it contained to the hour. So any last parting thoughts that we can give the people here that are listening tonight?
I would say that everything that's happening with these stimulus packages, and before we all overreact, let's wait and let's take a couple of days to read what the final bill is that they vote on. I'm guessing they'll vote tomorrow. Hopefully by tomorrow night, get it done. So let's take a look at it. An adult look at it, right, and realize that everybody is kind of in a jam right here, and there's no great perfect first draft of anything, but this is the best bad bill that we've got. This is the best bad bill. And so, but there can be more bad bills. There's going to be plenty of other bad bills that are on the heels of this, and maybe they'll be a little bit better. They won't be as bad. They'll be lepers with more fingers, right? And so in that aspect, I think people should not panic. I think people should look at the money they have and be realistic And if you don't have enough money to kind of survive the coming 4 to 6 months, because I think that's what you need in savings, 4 to 6 months to get through this. If you don't, then it's time to consider going out and looking at, these emergency assistance loans. Look at some of the provisions that these bills will have. I think they're going to help a lot of people.
Yeah.
They're not going to be perfect, but they are going to help people. This too shall pass. And let's just take it one stimulus package at a time. But if you have some extra money and you're thinking, how can I kind of benefit from this, or how can I protect myself? You know for a fact they are printing into existence a lot of money. 6 trillion already, not counting what happens in repo if any of that seeps out, not counting what the Fed will do when they go into the ETF market and the mutual market and the debt markets for corporates, and it just goes straight into the equities markets. So they're coming in with cash, and that cash is going to escape the system. There will be inflation to some extent, no matter what they say. So knowing that, you might want to put a conservative amount of money into, say, the top 3 or 4 assets, digital assets. And this is not financial advice, but this is what I'm doing. I'm spreading it between Bitcoin, Ethereum, and XRP, and then to some extent Cardano as my lottery ticket. But again, you don't spend money you don't have, and if you don't have 6 months of money in your bank account, and also, by the way, everyone, if you can grab a little bit of cash and have it at your house. It's always a good idea to have a little bit of cash. Yeah, that would be my advice.
Good.
Now.
Yeah, I agree with that too. It's good words. Always keep cash on hand no matter what. There should always be a little stockpile somewhere, because you just never know, that just in case moment. I know down in South Florida, we learned that lesson mainly going to hurricane season. And when the power goes out, the power's out. So, and there are no credit card processing. It could be 1 day, it could be 3 days. Some areas go out for a week, but it's always good to have, a backup just in case. So, but with that, we are going to wrap it up tonight. Really appreciate all of you guys coming on, chatting, participating in the stream tonight. I really appreciate your comments and feedback that I've been seeing, going through. Any questions, comments that you guys have, go ahead if you want to leave them in the chat here. We'll be checking the chat as we go on. The roundtable coming up on Sunday night. We'll definitely want to address more of this, because we'll have a couple more days throughout the week. We're going to bring Nick back on again for the roundtable. And hopefully next week, if we get everything together, we'll be rolling out a new show with Nick. So that's going to be awesome too, right here on the chain. In the meantime, like I said, comments, questions. Also, go to the description below. Join the Telegram channel and Telegram group if you haven't done it. The Telegram group is great because there we can interact. We can continue conversation there. That is the t.me/onthechain_roundtable. You go there, we can chat. If you just go to t.me/onthechain, that's where we'll put updates when streams. And I neglected to put the stream up there tonight. So didn't even think about it as we're going live. But Nick, appreciate you coming on again tonight, and look forward to chatting with you again on Sunday on the roundtable. Have a good night. Oh, and one last comment. Tomorrow night, Thursday night, deep dive with DNI, 10 p.m. right here on the chain. So make sure you guys are there, and we'll check you out later.